I think, well, 2025, my end of year target is 250,000
250.
for Bitcoin. I think that we're going to get the maximum sort of bullishness on the amount of money to be created probably in 2026, 2027, especially because in the US, the Fed chair role is up
Yeah.
in May 26th. And Trump, maybe they're not going to get a complete political lackey, but they're going to get somebody who is on board with printing the money and doing what they need to do
Yeah.
to further accelerate this, make America great again. So I think that we're going to get a much more dovish Fed at the minimum, at the latest from May 2026. So we could see that 2026 to 2027 is absolute bananas. Well, everyone's just like, oh my God, they're just like, they're going to do everything. Everything QE and supplemental leverage ratio and Trivy buybacks and like yield curve control. It's all on because everybody's on side with Trump.
The stars are aligning for Bitcoin's most explosive bull run yet, and it all hinges on a coming tsunami of freshly printed dollars. By 2025, $250,000 per Bitcoin might look conservative as the Federal Reserve prepares to unleash monetary hell under political pressure. The real fireworks begin in 2026 when a new Fed chair, likely a Trump-appointed money printer, takes the wheel, turbocharging the economy with unlimited stimulus. Crypto legend Arthur Hayes puts it bluntly, we're entering an absolute bananas era of money creation where yield curve control, QE infinity, and treasury buybacks collide. This isn't just inflation, it's a full-blown dollar debasement party, and Bitcoin is the ultimate VIP ticket. While clueless investors fret over short-term dips, the smart money is quietly loading up for what could become crypto's defining moment. The playbook is clear. The Fed will soon abandon all restraint, politicians will cheer the money printer, and hard assets will skyrocket. Bitcoin won't just break records, it will shatter the entire financial system's illusion of control. According to Hayes, the countdown to monetary madness has begun. We will now bring you clips from Arthur Hayes' latest interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think that, people are living in hopium. They're saying, oh, it's not going to be so bad. They're not really serious about sort of changing the global monetary and trade and capital structure. There's not really going to be a divorce between China and the US. And I think, that's hopium. There will be a bifurcation of the world into a US camp and a Chinese camp. Countries will try to play both sides or align with one or the other. We don't know how that's all going to play out, but structurally this is going to happen. Trump is just accelerating a trend that was already present. He started a trade war in 2018.
Yeah.
Biden continued it. He has intensified it. He's backed up a bit, but if you've looked at how Trump does negotiations, he starts with a maximalist position. He walks it back. He looks more conciliatory. Then he comes back again at you with more maximum pressure to sort of get the best deal that he can given the set of facts. And so I think that's going to happen again. And so we're going to see some more volatility in the financial markets. But the best thing that we have figured out is that 140 on the move index elicits an immediate policy response. So you don't have to worry about it.
Say that again?
140 on the move bond volatility index elicits an immediate policy response.
Okay.
The day that move had 140 went to 172 intraday, Jamie Dimon gets on CNBC and talks about how bad tariffs are and how the bond market is having issues. Trump immediately does the 90-day pause. And Besson gets on TV talking about treasury buybacks, and the Fed, Susan Collins, says they're ready to do whatever it takes. So the market, the American empire cannot handle volatility, nor can any other country around the world. Bitcoin thrives in that situation, so we don't need to be worried. In 2022, in the third quarter, everyone was super bearish on crypto and other risk assets. Why? Yeah. Interest rates are rising, the bond market was collapsing, stock market's going down, FTX is imploding, nobody wanted to own crypto, Bitcoin hits 15,000, people think it's going to 10,000, that kind of stuff, right? And then out of the blue, Janet Yellen comes back with, not QE, this activist treasury issuance, issuing more bills and bonds, taking $2.5 trillion that are sterilized on the Fed's balance sheet and moving that into the global markets. And we saw risk assets from December of 2022 till early 2025 pump. Bitcoin up 6x, stocks doubled, gold doubles, everything is great. But the Fed has not really been that accommodative over that period of time. He just stood by, Powell sat in his cuck chair and got fucked by Yellen, right? Yeah. And that is the set we have today. It's a little bit different. So we have Besson in charge. We have another issue with tariffs, right? Bond markets melting down, stocks cratering, oh no, inflation is going to rise because China's not going to provide cheap goods. I'm very uncertain. I don't need to own Bitcoin. I don't need to own these other assets. But what happened? The authorities saw that volatility was increasing, and Besson gets on TV and talks about treasury buybacks.
Yeah.
Which is essentially a way for them to relieve pressure on balance sheet constraints, which allow the banks to lend more money to hedge funds to buy treasuries at auctions in this thing called a basis trade. And so I think that is going to be the bottom moment of this particular cycle when Besson got on Bloomberg and gave that interview saying he's got buybacks and he's going to make sure that the treasury market is well supported. That was a signal to go long everything. These hedge funds, they own bonds. They have a trade where they buy a bond, they sell a derivative futures contract. And they take that bond to the bank and they say, hey bank, I don't have any money to buy the bond. Can you give me the money? And they say, okay, yeah, sure. I'll look at the bond. It's a treasury bond, very liquid collateral. Here's some money. I want you to put a certain percentage of equity against that. Now, they need a lot of leverage to make this trade work from a profit standpoint. And so the less equity the bank requires, the more leverage they get, the more they do the trade.
Yeah.
And these hedge funds show up at the auctions and they say, I don't care what this bond is priced at because I'm just trying to trade this differential between a bond and a derivative. So yeah, the US balance sheet is because it's $36 trillion and all these sort of issues, but hey, I'm gonna make 10 basis points, lever it up 100 times. I'm sweet. I don't care what the price of the bond is.
This is kind of like the same basis trade that we saw when the ETFs first launched, and then when it.
Well, this is in the bond market. It has nothing to do with crypto.
Right. Okay. So, but also, you don't think they're going to go buy Bitcoin ETFs to
this is
that basis trade?
No, this is all about how many dollars. How do we get dollars into the system?
Right? Yeah.
So these hedge funds, they show up and they buy the treasury debt that Besson is issuing. Now the issue is that as a bond matures, it becomes less and less liquid as it moves further away from the benchmark tenor. So what can Besson do? Well, he can do a budget neutral, supply neutral thing where he issues a new bond. He buys back the old bond. So now the old bond trades a bit expensive.
Right.
The spread narrows between the old bond and the futures contract. The hedge fund makes a profit. Now their books are relieved of the old bonds that required a higher equity capital charge. They get these new bonds that they can get more leverage on. They made a profit, and now they can do this trade even more. And so Besson is essentially clearing the bank's balance sheet so they can lend more money to these hedge funds who can show up at the auction and buy the debt at a very expensive price and buy a lot of it. And in my presentation, I talked about how I know everyone's talking about Doge and Elon's going to cut the budget and all this kind of stuff, but looking at the numbers so far, fiscal year 2025 is tracking 22% higher than fiscal year 24 in the United States.
The bigger deficit this year.
Correct. We're going to have a bigger deficit this year.
Even with Doge.
Even with Doge. We're going to have less tax receipts because the stock market's down. And so that is the structural way that they just can't cut stuff fast enough.
Right.
And then if they do cut things and they have a recession and then all these automatic stabilizers come in and the government has to spend more money on unemployment checks and all these sorts of things. So there is only a one-way street for the deficit to expand. Besson needs to find someone to buy these bonds. He can do so by giving more leverage to relative value hedge funds by doing buybacks. And so that's the mechanism for how, a buyback in and of itself is not liquidity positive, leads to more dollars created through higher borrowing that is led by these relative value hedge funds who buy this stuff. So there's the supplemental leverage ratio. I know people have been talking about that. And essentially that is, if I'm a bank and I buy a bond, these new regulations after the global financial crisis said, hey, you guys didn't hold enough capital against these bonds you bought. So we're going to make you hold more capital. That's responsible. And that means is I can only buy so much debt of the US government because it costs me precious equity capital to do so. So what the Fed did during COVID was when the bond market melted down, they said, hey, we're going to exempt you from that. You can buy as much treasury debt as possible with no equity down. So infinite leverage.
Wow.
And then after the fact, they reinstated that rule. So, Jamie Dimon's calling for it. Scott Besson's calling for it. The Fed has been talking about it in their meetings about, okay, to help the market function better, maybe we should exempt again treasuries from the supplemental leverage ratio so banks can go and buy them. So this is great for bank profitability because they go to the depositor and say, oh, I'm going to give you 1%, 2%, whatever it is.
Right.
I'm going to go buy this treasury debt at 4% with infinite leverage. I make 2% interest margin. Happy days.
Yeah.
I'm making lots of fucking money.
Yeah.
And so that is going to allow the commercial banks in the US to buy all the debt that Besson is issuing at whatever price Besson wants to issue it at. And again, not QE.
Right.
It's a regulatory change, but that's how it impacts how the financial system functions. But again, he's not doing anything different than a Democrat would have done. The policy will be the same. It's just the rhetoric and the speed. That's the issue. But that's why Bitcoin's great, because we don't care.
Yeah.
We know you're going to print more money. We know that Bitcoin does best when money is printed. I can't tell you what stock's going to do well. Like, that's hard.
No.
But I can tell you Bitcoin's going to go.
Yeah.
Behind the scenes, central banks are secretly pumping emergency liquidity, executing buybacks, stealth injections, and exploiting loopholes to prop up an increasingly fragile system. Sound familiar? When Bitcoin plummeted to $15,000 in 2022, hidden money printing quickly reversed the trend, sending it soaring 6 times. Now, with US-China tensions escalating and runaway deficits, another massive liquidity storm is brewing. Bitcoin flourishes amidst financial chaos, and while politicians pretend to hold control, their growing desperation only accelerates crypto's ascent. The coming monetary collapse isn't a mere risk, it's an inevitability. When the house of cards inevitably falls, Bitcoin will stand resilient. Will you be positioned on the right side when the dollar crumbles? In an era of mounting pressure, Biden added $7.1 trillion to the deficit, and Trump is already surpassing him. With an aging population, soaring defense costs, and a debt spiral that can't be stopped, the money printer remains the only solution. Bitcoin surged 6 times after the 2022 crash fueled by covert liquidity measures. Now, with US-China tensions and an impending spending frenzy, history seems to be repeating itself. ETH, though often undervalued, could see a surge in an altcoin rally. Let's watch more clips from the interview.
In your speech, you said, I think, Bitcoin to $1 million
Correct.
in 2028.
Correct.
So what leads us to that?
So Biden issued about $7.1 trillion of debt net to Treasury issuance over his term, right? And we got Bitcoin 6x, right? Trump was already tracking 22% higher in the first few months of his tenure.
And again, is that spending?
This is
higher
net,
deficit.
This is net Treasury issuance.
Okay.
No, sorry, that's the deficit. The deficit is cumulatively $7.1 trillion deficit. The deficit's already expanding under Trump, and he's supposedly doing Doge. Yeah, they're cutting stuff. It's a drop in the bucket.
Not enough.
Right? And if you think about the U.S. population is getting older structurally, so Social Security and Medicare payments will rise structurally. They can't stop that. The defense budget is going to only increase, right? They're going to have to reshore production, build a bunch more missiles and bullets and all that sort of stuff, right? And so, like, again, the deficit's only going one way. It's going higher.
So what's the path to 1 million?
Yeah. So again, expanded deficit, 7.1 trillion cumulative deficit under Biden. Trump is only going to increase. U.S. population is getting older, so healthcare spending will increase. They can't change that. The defense budget will only go up because, we're talking about this global realignment of supply chains and trying to build it all in the United States and not use Chinese intermediate products. That's expensive, right? So it's going to cost more to buy American stuff. But again, that's not the point. It's like security and supply chain integrity and that kind of stuff. So the things that drive the budget are only going up, and interest on the Treasury debt, again, is expanding exponentially because even if Trump is successful on his plan, which is 3% deficit by 2028, because of where you started with the size of the debt, your interest costs are still expanding exponentially.
Yeah.
So again, there's just no way mathematically, unless they decide we're going to shut down the government, which is not what he's talking about, that they're going to be able to spend less than Biden. Yeah. And so, we know what was going to happen. We know how Bitcoin responds to this. We now have an ETF. We now have this this narrative in an institutional investor's mind. Oh, Bitcoin is not just NASDAQ high beta. It's actually a hedge against the fall of American exceptionalism, the fall of the American hegemonic empire. Maybe I should own some of this. This is going to do well, because I can't predict what happens with China and Trump and all the politics. At the end of the day, these politicians, they need to go back to their district and say, hey, here's some stuff, some goodies I brought you. Yeah. Whether it's a plant or it's some jobs and whatever. And so if Trump says, okay, guys, like, I know you guys deficit is bad, but hey, here's a bill and you can take it back and there's gonna be a new Ford plant. There's gonna be, a new chip foundry in your district. Are you gonna say no to that? No. You wanna get reelected. You're gonna bring back the jobs to your constituency, and the banks are gonna lend. Oh, there's a government program that guarantees a buyer for this thing? Sure. Here's a loan, right? Yeah. So credit expands in the economy and people have jobs and they spend money. Yes, there's inflation, but if everyone's got a job and they have a good income, do they really care? No. Yeah. So I think that's the playbook. in a sort of medium to longer term of how you get this expanded government spending and it being accepted by the population. I just think we'll hit the peak of the cycle in 2026, 2027. And then we're going to have to like think about, okay, we're expecting too much and then it might underdeliver.
Yeah.
Or, the Republicans are facing some election issues, right?
Yeah.
And things have to change. Or what happens with China? We don't know, right? There's so many other variables of how this could change, but I think the world is on this money printing track, and as that narrative becomes firmly entrenched, we're going to extrapolate a future that's really ridiculous,
Yeah.
and then we'll have to be brought back down to reality.
What do you think about ETH right now?
I think it's the most hated layer one, and so on balance, it should do better.
Yeah, exactly. Yeah.
It's most secure,
Yeah.
proof of stake, largest number of developers, large amount of value secured, all those sorts of
Yes.
things, right? Obviously, we were trading the rate of change and the expectation. That's why Solana went from 7 to 300, right? The rate of change of adoption of meme coins and transaction volume was really rapid. Therefore, the price went really, really high. But even at its peak at 300, it still didn't eclipse ETH in terms of total market cap, right? But again, we're not trading total market cap, we're trading the price.
Yeah.
So I think that Solana, yes, will it go up? Absolutely. Could ETH outperform Solana if we get this sort of money printing bonanza and people shift out of Bitcoin into more altcoins? Yes, and especially if ETH starts to show some life, the price creates the narrative.
Yes,
then all these things that we love,
ETH is great again.
Yeah, exactly. Oh, it's got the most developers. That's why I'm buying ETH. I personally think Bitcoin dominance is going back to where it was before sort of the 2021 altcoin season, which is like 70%.
Yeah.
It's that sort of area. And then, people start rotating, right? Oh, it's back above all-time highs. Oh, the bull market's back. Okay, well, altcoins should outperform. See that the should is a key word there.
Yeah.
Depends on what you buy.
Yeah.
And that'll give back the animal spirits for people to start going back in the ecosystem.
Yeah.
Like, okay, the bull market's confirmed. We went down, we're from 70 to 110, down to 70, back above 110, maybe at 150 or 200 or some level, like on rising volume, very good looking technical chart. Okay, now it's time to go into the shitter and try to find some gems. I'm not really into the whole strategic reserve situation because the countries that people really talk about, the United States, right? Okay, they're a deficit country. So the only way they're able to do strategic reserve is, okay, well, we're not going to sell the Bitcoin we took from people. Okay, fine, that's 200,000 Bitcoin. But I just don't see how a politician who's popularly elected goes and says, I'm going to print some money to buy Bitcoin. Especially when the popular narrative is a bunch of Bitcoin bros going to the club buying bottles. Is that really what you want people to think about your policy? I just don't see that happening. I see people doing the China play, which is, okay, I've got excess electricity that's stranded. I'm going to mine some Bitcoin and I'll hold it on the state's coffers, but I'm not buying it in the market. Or in the UAE, right? I've got excess hydrocarbons. Fine, I'm going to save those hydrocarbons. I'm not going to pump the oil. I'll generate electricity, create some Bitcoin. I'm not going to print money and buy Bitcoin. I might print money and hand out a check to everybody because at least I get more voters that way.
Yeah.
Right? I just don't see strategic reserve happening in the way in which people fantasize about it. And so therefore this situation where America's printing trillions of dollars to buy Bitcoin. I mean, why? What's the point? It doesn't buy you any votes, right? Okay, cool. You made the rich people who are going to vote for you anyways richer. That's not a valuable strategy to, counter sort of a resurgence of the other party in the next election. I think we have decoupled. I still think there's going to be another big sell-off when Trump goes back to saying, oh, we're really going hard at China or something like that, right? To really reestablish his credentials as maximalist position on tariffs. Oh shit, they're not going to provide the money that we want. Stock market goes down. Bitcoin might wobble a bit, but I think people are starting to finally understand it's about bond market volatility. They always act and always print the money when the bond market volatility rises, and therefore Bitcoin should do well. So I think we need one more demonstration of that to really just sink into people's minds. So yeah, do I think it's going to be another early April situation where Bitcoin and Nasdaq are tracking pretty much exactly? No, I think Bitcoin is going to perform. It might not go up, but it will be steady if sort of stock market creates a bit.
Meanwhile, Bitcoin stands at a critical juncture as it tests the $95,000 to $98,000 resistance zone, a price range where many investors originally accumulated positions. Glassnode data suggests long-term holders may soon take profits as unrealized gains approach 350%, potentially creating short-term downward pressure. However, this technical resistance must be viewed against the macroeconomic backdrop that Arthur Hayes frequently emphasizes, one of runaway deficits, inevitable money printing, and global financial instability. While on-chain metrics indicate some investors could liquidate positions near $100,000, the larger forces at play may overwhelm these local dynamics. The U.S. government continues spending uncontrollably, with both political parties accelerating rather than curtailing deficit growth. As Hayes has noted, this fiscal irresponsibility directly feeds Bitcoin's value proposition as hard money in a system of currency debasement. Remarkably, over 254,000 Bitcoin remain untouched for more than 155 days, demonstrating strong conviction among core holders. These investors appear to understand that short-term profit-taking opportunities pale in comparison to Bitcoin's long-term potential in a world where traditional finance is increasingly unstable. The path to 100K plus may not be linear, but the fundamental case grows stronger with each trillion added to national debts. As central banks inevitably return to money printing to manage crises, Bitcoin stands ready to absorb this liquidity, just as it did during previous cycles. The coming months will test whether technical resistance or macro fundamentals prevail, but history suggests that in the clash between local profit-taking and global monetary degradation, the latter ultimately wins. As we wrap up, what's your 2025 Bitcoin price prediction? $150,000? $250,000? Or even higher? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.